This week on Flick Knows, we talk about the showing time market stats as well as the Fed meeting. Stay tuned. Hey everybody, thanks for tuning in for another episode of Flick Knows. We are definitely here for you, and we're going to get into it today, go through a few stats, and just briefly touch on the Fed. So new listings in the last 7 days, we've seen 14 new listings, 7 properties go pending, 29 properties have been sold in the last 7 days, and 12 properties have been price reduced. So yeah, I mean, just a little bit lower activity. At the peak of activity, we're seeing numbers in the 40s and the 30s on a 7-day basis, on a weekly basis. Right now, we're just seeing, properties coming on the market, 14. We're in that before Christmas time frame. We're also seeing inventory is going to probably hit its lowest number of inventory at 300. We're at 332 today as choices. And as we get into that Christmas and New Year's time frame, we're going to see probably the minimal amount of inventory out there. We ended November of 23 with 719 active listings. December of 22, so a year ago, 675. Today we're at 679, so right at about where we ended December of last year, and again with those 332 choices. Going into the showing time market stats real quick, we've got new listings. Let's talk about single family homes first, as we typically do. So new listings, we're at about 25 new listings according to showing time market stats, which is a little bit lower inventory coming on the market than we've seen in the past. Average sales price for single family homes in the month of November is actually up 5.8%. Year to date, single family homes in Summit County is still down 1.8%. So price point wise, what does that mean? Okay, we're talking about, instead of 2,115,000 year to date in 2022, we're at 2,077,725 year to date. So plateau. I think we can pretty much safely call that a plateau on single family homes. Percent of list price received is down on single family homes to just about 96% or so, and days on market has gone up to 79 days on market for single family homes. Month supply of inventory is 3.8. We consider a balanced market 6 months there for single family homes. So I think there's a couple of different stories here, and one of those is going to be, prices have plateaued. I think when you segment the market a little bit more and you get into the different market sets where you can short-term rent, where you can't, as well as price points, 2 million and above, 2 million below, homes that are 3 bedrooms or more, right around that million to $1,250,000. I think we're continuing to see appreciation in that price point there. Homes in that 3 to 3.5 and above, we're going to be seeing those as plateaus. We did have a deal just closed. It was a $12 million deal, $12 million home. So that price category, of course, seems to be doing just fine. As we did have another $12 million sale that just closed recently in December. That's not going to show up on our November stats. We'll see that year to date when we do next month's. Well, let's take a look at townhomes and condos. A lot more new listings there. That's up year over year. Average sales price $846,000, which is up 3.9% year to date. These properties are averaging $833,000, which is up 2.9%. So I think a big part of that is that lower price point. Percent of list price received is about 97%, and days on market up to 50 days on market. Month supply of inventory 4.2 months. So again, we aren't quite in that balanced market, and I think that leads us right into the Fed, right? So what we're seeing right now in the marketplace, I think if you're a buyer and you're waiting for something big to happen, I think the opportunity, quite frankly, may be missed. And here's why. A lot of homeowners refinanced, right, into these interest rates that are down to the 3%. They are unlikely to sell that 3% rate, because if they were to sell and upgrade to a new property, they're going to be picking up that 6 or 7% interest rate. So we're going to see that inventory remain low. Supply and demand. We are going to see inventory remain low. Sellers that are coming to the market are selling, and they are going to go do something else. We aren't going to see as many upgrade buyers as we have seen in the past, or upgrade sellers as we have seen in the past. Are we going to see them? Sure. Not quite as many, because of those refinanced into really low interest rates. As the Fed, which has kind of announced that their, inflation is down to that kind of 2.8, their target rate is 2, they're expecting it to be 2.5% by the end of the year, which is, pretty close to where they need to be. They aren't going to be doing any more rate hikes. They are more likely going to be doing rate cuts, right? As rate cuts go down, although there is not a direct one-to-one correlation between what the Fed is doing and mortgage interest rates, I think we can anticipate that we are going to see mortgage interest rates go down as we get into that June, July, August time frame there, as the Fed is going to cut interest rates there. Inventory is going to remain low. I am not seeing anything that is indicating inventory is going to climb exponentially in the near future. So as I anticipate the interest rates coming down, and we're coming out of this economic kind of uncertainty that we've been feeling for the last 18 months, I think we are going to see more buyers come into the marketplace, and we are going to see more competitive situations again because of inventory being low, demand outpacing that inventory. And so let's keep an eye on that. There may be some good opportunities here still in the next 6 months or so before we start getting back into that competitive environment. But let's keep an eye on it. If you have any questions about it, certainly reach out to me and ask. We're here for you. I'd love to have that discussion with you and kind of see where we see things going. But I think we're going to still stay on this plateau for at least the first quarter of the year on prices, and then I think as we get to the end of the ski season, we're going to see things starting to pick up a little bit more. So that is my speculation. I think it's fairly reasoned from what I'm seeing in the marketplace, but I'd love to have that discussion with you. So as always, Team Flick at summitliving.com. Thanks for sticking around for the whole video. Hope you're having a good one. We'll talk to you soon.